You found affordable day trading. That's what we do here on the channel. Now, this is a risky kind of trading. However, if you're the kind of person who has some discretionary income, which you can afford to take a little higher risk than you normally might, you could be interested in this because in return for taking that high risk, you get to bank immediate profits. And it's a lot of fun. I'm going to say that again. And it's a lot of fun. Featured trade in today's video is from July 12th, 2023. One of the things we do on the channel here that makes things easy to learn is we use the same setup all the time. The candlesticks, 5 minutes, the MACD, called MACD, it's your trade signal indicator in the bottom half of the pane, and over in the right margin and at the top, inside the circles there, that's where your live trade price will be. Okay, I'm going to take all the markup, fade it off the chart here, and we're going to talk about the most important part of a trade. That's the art of trade selection. Why this trade and why now? I'm going to zoom in. We're going to be trading the MES, which is the S&P 500 Micro Emini. It trades at $5 a point, as you're going to see. Notice in the yellow highlight at the bottom of the screen there, we're trading the day session 9:30 a.m. and the chart goes over until noon, but we'll be out of the trade way before then. I had been out of the office or working on other things until about 11 o'clock on this morning, and I opened the screen and watched the trade for a little while. And I looked back since the opening to find out what's going on today with the market. The best advice I can give anybody who day trades the micros is just keep things simple. Sometimes what you see is what you get. See the blue arrow there at 9:30. From about 9:30 till maybe 10:15 or 10:20, the market goes up 15 or 20 points from 45.10 to 45.20, and then it levels off. And look at this. Look inside the purple rectangle I just drew up on the screen there. I counted them. There's 12 candlesticks, 5 minutes apiece. That's for a whole hour. Prices hardly varied at all, like from 45.18 to 45.24, somewhere in there. And what that means, there's no mystery, there's no brainiac computer science or hocus pocus going on. It means that the buyers and sellers were pretty well equalized during that entire hour. There was no more buyers or sellers than one than the other, or the price would have moved up or down more than just a couple of points. Now, I didn't really plan it this way when I picked this trade to show you today, but there's a good teaching moment is what I call it right here. You see, inside that purple rectangle, prices are neither going up or down. So what I'm saying is for over an hour, the fish aren't biting. The bus isn't moving. There's nothing going on. You won't have a chance. You couldn't make or lose money for that whole hour, not more than $5 or $10. And when you see that, you just got to stay out of there. You know, I know you get impatient. It's fun to trade, and you want to do it, but you spend 90% of your time looking for trades, not trading. You spend maybe 5 or 10% of your time actually inside of a trade. You don't always have to be the smartest lady or gentleman in the room to make money, but you may have to be more patient than most of them. I finally pulled the trigger on this trade, decided to short a contract at 11:36. That's just about 2 full hours since the market opened, and prices have not been this low for almost 2 hours now. So I sense this is an opportunity where I won't have to risk a lot of money to see if my game on this trade, that the market's going to go down, will happen or not. Now, this picture on your screen now is what I've been looking at the whole time. I just zoomed in for a while. I think there are times where the MACD might present a clearer picture of the market movement than maybe the candlesticks do. Now, let me show you a couple of things about the MACD that go unnoticed by a lot of traders. First, I'm going to highlight the right scale. That's almost the same as a relative strength indicator. It goes up and down, of course, being bullish and bearish in the market respectively. And you also see the green lines down at the bottom, the vertical green lines. Now, they are the same length as the distance between the red and green lines are. And you can see that happening there. And I can take a bigger picture look at the whole thing, and the MACD, like the candlesticks now, is telling me that for the first time, the market's really, although it had a little momentum in the beginning and then leveled off for quite a while, but now the momentum is clearly decreasing. And When you short a contract, when the momentum is decreasing and the prices are going down, you have a higher probability of having a successful trade. And also, it's a great indicator that it might not cost you as much. You won't have to put a large stop on it. That's a lot safer trade than going back up to that purple rectangle up there when the fish weren't biting for over an hour. So you get a chance to make a less risky trade. So in terms of trade selection, what you've just seen is a great way to integrate the MACD and the candlesticks to try to portend what may be most likely to happen next. There are never any guarantees. Now, it's a very important thing when you realize that the probability of profit of your trade has everything to do with your trade selection. With over 20,000 subscribers to the channel, the most frequently asked question I get, the number one question or comment that people send me is, what do I do? How do you choose your stop? I keep getting stopped out over and over again. I change the value and I still get stopped out. What am I doing wrong? What I hope you realize quickly is it's not the amount of the stop that's causing you to get stopped out. The primary cause most of the time, and this is spurred on by over trading, but what you need to do about the stop to make it better is better trade selection. As in I explained what I picked in this trade, and it was I had to wait and find a place where I didn't have to risk a lot of money to try and make some. In other words, I want to be able to stay in the game without getting shot. That's what your trade selection does for you. You see, when people are asking me, how much should my stop loss be? They're assuming that getting the right amount or some formula that doesn't exist is gonna keep you from getting stopped out, but that's not true. The problem with getting stopped out too often is trade selection, not the amount of the stop loss. You saw when I was setting up the trade here in this video today, I had to do quite a bit of logistics to be able to find a place where I felt like I had a high probability of being able to make some money on the trade. And then I didn't worry about the stop too much. Usually, rule of thumb, 1 or 2% of your account is about the most you want to risk on any one trade. That's your rule of thumb, and of course it varies. I enter most of my trades with a bracket OCO. Bracket one cancels the other, OCO. And in Tasty Trade, you can see it has an automatic calculator in it. When you put in a value for your stop, the price value, it'll automatically calculate how much that is you're risking and show it to you on the screen. Same's true of the target price down there. And of course, another nice feature of using a bracket OCO order is that whichever the stop or the target is hit first, it'll cancel the other order, so it cleans up things. You don't have to go back and remember to take an order off the screen. So here's the trade I'm featuring in the video today. Watch fast. If you blink, you may miss it. I'm going to short 2 contracts of the S&P 500 Micro Emini. Now, each of these contracts trades at $5 a point, so I'm trading 2 of them. So I'll be trading at $10 per point with 2 contracts there. Notice the blue is where I shorted the 2 contracts, 45.13.5. And only 1.75 points up is my stop at 45.15.25. Now, the S&P 500 Micro Emini is $5 a point per contract. I'm short 2 contracts now. So at $10 a point, max risk is $17.50. Here I'm just zooming in a little bit, adjusting my screen so you can better see the trade. You can see the live trade price inside the red circles there. I think it's really important during a trade to always understand the rules you're playing by here. Right now, every possible outcome of this trade lies between the red line and the green line, the stop loss price and the target price. Now, of course, at any moment I can choose to exit the trade with an instant gain or loss. That's always a third possibility. I like having everything on one screen here because I can see it right in front of my nose while I'm trading. Now, that Tasty Trade mouse, I can just click and drag that left mouse button. I can adjust the target price and the stop loss price. Of course, my price where I shorted the 2 contracts is fixed. Contrary to the false narrative that's alive and well, I have no control over how much this trade may or may not offer me. I take my tasty trade mouse, I'm moving my stop down. At this point, I don't know exactly where I'm going with it. And then all of a sudden, I look over in the right margin, and it traded 45.11, which is where my target price was, and I'm out of the trade. Okay, two things. I'm going to level with you. First of all, I lose 40% of my trades, just like you do. But you also saw, as was exhibited in this trade, I have a tenacity for protecting my account balance. That's what you need to do. It's not about coming up with a stop-loss formulated number. It's a matter of picking trades where you have a better chance of winning. And that takes patience, and you have to wait, and you fear missing out and all that stuff. But it really makes a huge difference in your bottom line when you're trading. Now, this is a form of very speculative investing. Now, it's an interesting question that gets tossed about over the years. Like, really, what's the difference between speculative investing and gambling? Well, I've given that some thought. Imagine there are two casinos. They both have blackjack, or the card game 21, you know. In one of the casinos, you can go in, and it's played like a regular casino. You have to play the cards you're dealt. But in the other casino, you can go in, and you can take a look at the next 5 or 10 hands of the blackjack deal, and you can pick one that you want to bet your money on. That's the difference between gambling and investing. A lot of people have reasons to make you want to believe that you should be in a trade almost all the time, like a gunslinger, firing away. But actually, when you do that, you're in the wrong casino, because you're having to play all the cards you're dealt. You don't have any discretion at all. Well, you have discretion, but you choose not to exercise it. I've been doing trading for a lot of years, and I've never seen somebody that had the wrong expectations in their trading actually learn to be happy with it or satisfied. Because to do that, if you're going to do it again and again, you need to be making some money. And this is risky. You're going to lose 40% of your trades. You have to make friends with uncertainty. Do you hear me? If you expect to win them all, or to get your win rate up from 60% to 80 or 90% and keep it there, you're dreaming. And I do want you to succeed. I want you to enjoy your trading and be able to make a few extra bucks with it. And lots of people do it, but you have to have your expectations right. And having your expectations right and understanding what the probability of trades are, that applies to all kinds of investing, not just day trading the Micro E-minis. I need your help. If you want to see another video like or similar to the one you saw today, please hit the like button. I tally those, and that gives me better ideas about what you're enjoying viewing, and so I can make better videos for you. So I appreciate your help on that. So in today's featured trade, we made 25 bucks, and I think the time was around 90 to 95 seconds duration for the trade, and the drawdown was only $2.50. That was the worst off I was at any point during the trade, as everything to do with trade selections. I think this is going to be one of the more valuable videos for the people on the channel here to watch. Just get your expectations right, so you can enjoy your trading, make a few extra coins, and have some fun. Be sure and subscribe and hit the little alarm bell so you'll be notified by text or email as I put new videos up on the channel. It's sure been fun today. I'm Don Singletary. I hope every day is a payday for you, and thank you.